Not to state the obvious, but that bond rally from yesterday, what did it really mean? Well, we're going to try and figure that out on pre-market prep. Going to talk about the corresponding moves in gold, and Bitcoin finally breaks out of its trading range. I guess all the people that were going to Walmart are going to Target now because much different earnings reports, much different charts. We'll discuss that. Not much going on in ratings land, folks. Space has another lockup. They kind of snuck that one in on us. We'll discuss the potential implications of that. Folks, it's Thursday. We're sinking fast. Let's get the show started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, folks. We're starting out with these charts. Not exactly what you want to see here on a Thursday morning, but these charts are brought to you by TradeStation, born to trade. Chart, analyze, customize, all-in-one platform. Trade smarter, move faster, stay in control of the platform built for all types of investors. Yes, folks, we are in a little bit of a free fall here, losing 30 handles pretty quickly, testing the low from yesterday. We'll see if what the appetite for the buy the dippers. I'll go in a little more detail on what I don't like about this S&P chart when Triple D comes on. The buck is down 9 cents, getting shellacked yesterday, unable to rebound today. Will the 200-day moving average do anything? Easy come, easy go in the bond market. You tested resistance in the TLT, back down 79 cents, 82.24. Let's make matters worse here with the USO up 462 at 135.53. That's not what you want to see. GLD had a big gain yesterday, taking a little bit of a breather today, down 1.22%. That's $5 at 408.79. SLV down 44 cents, 59.56. That chart doesn't look as perky as the gold chart. And Bitcoin, long consolidation period. Yippee-ki-yay. We are in the 72,000 handle, up nearly $3,600 in the futures, 72,170. I'm going to bring Triple D on, and I am not going to let him talk me out of my mean bearish mood.
Okay, go. Bear me up.
This bond move. What the heck is going on? You have the Treasury doing one thing. You have the Fed doing another thing. All it does is signal stress in the bond market. I don't know how the Fed and the Treasury can't work together. And what does it do? Here's my main question to you. How does it fix the underlying problem? Does it reduce the deficit? Does it help inflation? Treasury put, I don't know what it is now. Buy puts. We're losing the Treasury now. So how can you be bullish still?
On the bonds or on the stocks? Because it's two different things. Where are you going? It's two different things, completely different things. Because the bond market's been a 3-year bear market and the stock market's been a 3-year bull market. So they're completely separate things. So it depends. You're seeing the TLT not hold the gains. Not great news. You're seeing a lot of other stocks roll over. Walmart is hitting the stocks today. So if you're talking stocks overall, we've been running and running. This is a market that has shrugged everything off. The bond market is the exact opposite. Nobody wants bonds because we're getting this huge AI growth. We have this, changing of the guard. We have technology running rampant. And who the hell wants to sit around and wait for 5%? So I think the bond's biggest problem is just the fact that it's competition with stocks. When stocks going up 25% a year, there's nobody that's interested in a 5% bond.
Okay.
That's kind of where the bond problems are. How that changes is we actually start getting stocks showing weakness. How that changes is we actually have people start getting losses in the stock market and they want more safety. But we are in speculative bubble here. When Moderna can rally 200% in a day, it's telling you that speculation is running rampant. We know there's times when speculation runs rampant and then we have a correction here. is the overall market in that situation. We saw that with the chips over the course of the last month, but overall stocks have held up very well. We haven't had one of these everything sell-offs. This morning, we're getting a little bit of an everything sell-off here, thanks to Walmart. I'm going to blame Walmart for this S&P continued leak here, because Walmart reported. We probably should start right there, actually. We're going to go off the agenda a little bit here because, we're going to get to crypto here in a second. Crypto had a great day yesterday. But Walmart, it comes up with a rare miss here. And this is hitting stocks and hitting retail stocks specifically.
And as far as like macro headlines, we haven't heard from Trump. We haven't seen any macro headlines. The Walmart report was right at 7 a.m. That's kind of when we started selling off. So you might be onto something there. Triple D, Walmart reporting Q2 earnings, 81 cents. That's a beat versus a 74-cent estimate. Sales beat around 188 million. The guidance for next quarter was a little light, though. I think that's why the stock's getting hit. They're looking for next quarter earnings 62 to 64 cents. Analysts are up at 68 cents. Their sales guidance around 184 billion for next quarter. Analysts are all the way up at 188 billion.
And yeah, don't look any further than that. Guidance trumps all. We always talk about that. Walmart guiding a little bit light, scaring the hell out of everyone, especially when you consider where this stock is trading. I mean, we've been like, oh yeah, it's Walmart though. We can pay 40 times earnings for Walmart. We can't. And if you did at 138, you're in trouble. And I mean, we're at this point here now. They're talking about $2.75 for the whole damn year. So take the 114 price, or you can take the 107 price. Just do your calculator. Do your grade 1 calculation here. We'll do it. We'll take even the higher end. We'll go 285. We'll take the price that it's currently at. So we'll go 1808 divided by 2.85. That's saying all roses. 38 times earnings in a perfect scenario here right now. This is crazy, man. You're paying 38 times for a retailer that's actually the earnings are going to go down on the estimates. That's crazy. I can't believe people are paying that, like 42, 43 times. It's still 38 times.
You're supposed to be making me bullish stocks, Dennis.
What's that?
You're supposed to be making me bullish stocks.
Well, Walmart is definitely not the stock market. It hasn't been the stock market for a long time. It actually trades opposite to the stock market on most days. So if you're bearish Walmart, you're probably bullish AI stocks. But Walmart's rolling over here today. Retail is rolling over here today. The chips just rolled over here too. They've been up all morning. They just rolled over here too. So it's not a great day for stocks today whatsoever. But I mean, the Walmart valuation is absurd. I mean, this is not Costco. You cannot lower guidance when you're trading at 40 times and you're a retailer. Costco, how was the last time Costco didn't hit or like the guidance was light? It's not, because it's best of breed and it continues to grow. And you go, those stores are packed. So Walmart, we're not talking about the earnings right now. So they didn't actually miss earnings. It's the guidance that's the concerning part here. And when I look at fiscal year EPS of 285, and I just did the grade 1 math, and 38 times they're paying for those earnings, I'd much rather own a tech stock at 17, like NVIDIA's 20 times. You're going to pay twice as much for a Walmart earnings than you are for an NVIDIA, same dollar of earnings. That's how stupid this market is. At 140, whoever bought 140, those people are flat out stupid.
We'll just shape up the technicals. It's very easy for this. You're back at the low of the move. You had a big decline after the last earnings report, a gap and go to the downside. Didn't even sniff that gap from before. Constant selling pressure, a little bit of pre-earnings run, a little bit of actually the last 4 days were all red bars here. But the former low of the move was 106.79, I believe. This low here, that's what we'll be concentrating on. Pre-market low is below that, which is not a good indicator. The pre-market low is 105.89. So any hope here for Walmart, you got to get back and hold this low. Doesn't look like it's going to hold up today. Personally, if you want this stock, wait for at least double digits.
I just think, again, you can come in and buy the dip and say it's Walmart, and, it does get a pass most of the time here. But, should you be paying 38, 40 times earnings for it? I mean, I don't even know. Like the ratio I thought was 40 times earnings was 140. It's still 40 times earnings today. They're Nikeing this thing all of a sudden. because the earnings of estimates are coming down a little bit here. And I mean, Nike has been the worst stock ever. I'm not comparing Walmart to Nike, but I'm saying when you're paying 40 times earnings, you've got to be getting earnings growth blowing estimates away. You cannot have estimates coming in light. So it's deserved to be down here. If you're coming like, oh man, Walmart, great buying opportunity. You're still paying 38 times earnings right now. That's at the upper end of their projections. That's a crazy multiple to play for a retailer unless it's Costco. And Walmart, unfortunately, is not Costco.
And Nike trading around 25 times forward PE. Is that right? That's crazy.
Yeah, still.
Wow.
Trading at that because the earnings have just imploded. Now, Walmart's not going to implode the earnings like that. So Walmart's still a great retailer, great company, great run retailer. So we're not talking about the company. Nike's a poorly run company. Walmart is not that. But again, you're paying so much for those great earnings here. I'd much rather be in a Costco at 40 times earnings than a Walmart if I'm picking between the two. Mm-hmm. I mean, in a Target last, at 12 or 13, now it's like up to 20 times earnings. That's a big difference there. So anyways, we continue to roll over in the stock market. It's not going to be, but Walmart is definitely put pressure on a lot of stocks here because nobody expects Walmart to guide light. So they're like, is the consumer, it's going to be questions. Is the consumer slowing? That's what the questions are going to start today. And that is why the stock market is rolling over here because we're looking at it across the board. This isn't everything sell off here. Retailers are a mess. We've got obviously tech stocks have turned red here now too. Chips are up all night. They've turned red. Banks are down. Airlines are down. Oil's back up. It's a sloppy, messy day. So, Joel, your bear thesis, at least in the short term, you can see this obviously on our trade station here. It's a lot of red on the screen.
Yeah, and Brent mentioned we've been selling off since those Walmart earnings, but when you look at it, we had that ridiculous rally in the pre-market yesterday. We got right up to the bottom of Monday's range, which was just not a great day. We were lower on Tuesday, so I mean this is significant decline, and there's just like no bids out here. I mean, since we've started the show, I think we've dropped like 20 handles, and I put in the Slack chat here that the S&P chart is just making me nervous. Because if you go to the daily here, let's say you are affirmed by the dipper, well, where's your support? Well, where are you going? Where's your support here? I mean, you guys know I'm a daily level guy. I mean, we broke out 76.29. That's 60 handles from here. I mean, if you're taking a long here, that to me, you're risking 60 handles here. There's nothing there. There's nothing in between.
It's a lot of air below. We ran up, and there is a lot of air below. There's been things to worry about in this market all the time. It's a matter of when the market starts worrying about it. Is Walmart a wake-up call here for the market and saying maybe the consumer is a little bit? But Walmart's a discount retailer.
Yeah.
So I don't even know that's a great gauge for the consumer here. Like maybe that's a gauge that they're trading up. Like the consumer's actually doing so well they don't need to shop at Walmart. You can make that whole argument there too. But right now the market is selling off first and asking questions later because this market was up all night. Like it was holding up all night. It started selling off with Walmart. This coincides perfectly with the Walmart report. And people are like, crap, Walmart's missing and down 6%. That's spooking me. I'm selling stocks. And as money
people are just running out of money. That
they never seem to do that, Joel. But you would think at a certain point in time that would occur, like logically speaking, but it just never seems to happen. People will find more money to spend. This is a spending economy. It's a YOLO world. People come in. And basically, that's, we're living for today, not for tomorrow. The whole mindset changed with COVID. And that was great and that's been great for the stock market. I mean, without COVID, like let's go back. We can say how bad COVID was for the world, inflation and everything. But I tell you, stocks would not be where they are today without COVID because people were saving for a rainy day and they don't anymore. And a lot of those savings came out to spend. People spending money.
That's kind of scary what you just said there, Dennis.
I believe the whole mindset of the consumer changed. It's live for today because there may not be a tomorrow. A lot of people changed that mindset. The whole YOLO thing started after that.
Pretty much, yeah.
Continue on. Like, let's go back, just to yesterday here, and the big move. Or we can go to Alibaba too. Like, we might as well go with this theme, actually, because Alibaba's missed here as well. Yeah, okay. Do Baba.
Okay. Baba here this morning reporting, must have been around 5:30 a.m. Yes, they report earnings of $1.26 on sales of about 39.5 billion. Analysts were around 38.5 billion, so they beat on the top line. I don't believe they gave guidance, but let me check in the press release here real quick. But I'll kick it over to you for the chart here, Joel, as I'm looking to see if there was any guidance for Alibaba.
Had a nice run, sub 100. They don't like the earnings. I mean, it just, where are you going to go with this one? Fill in some gaps, but that's because of the overnight market. It looks like you've turned here, and you have the 200 above the 50-day, which is not a good thing. So maybe if you're looking, you want to be a little cautious and look for a re-entry point. Maybe look at this 114 area.
I mean, this again is run, and we know China stocks are always guilty until proven innocent. Every time we get these rallies in these China stocks, they just come out and they go back down. I mean, Baba just rallied from 90 to 130. It's probably more of a sell up here than a buy. I have some of my long-term portfolio. You try to invest in good companies at reasonable valuations. Baba has been that. But I tell you, from a trading perspective, every time Baba rallies 20, 30%, it's another selling opportunity.
Yeah,
Baidu looking at that, gave it
holding
all
the
back.
Baidu.
It's an argument against investing again, like it is on certain, like
Yeah.
at least in China. Like is China, the question is China uninvestable? Because we've been up pretty good on some trades. We're like, oh, we're investing these things. I mean, look at the FXI. Like EEM is unbelievable. The FXI, bring up as long as you can go back on your trades.
I will.
Joel. FXI, as far as you can go back on the chart. Because this right here is telling you we are back here at 2015. We're below 2008, below 2015. I mean, this absolutely has been, if you want to know the worst place to be invested, it has 100% been China. This is just an awful looking chart. 2008, we were $70. Now, again, everything blew up after that, but stuff came back. China never came back, not even close. And now you look here, like going nowhere sideways. So this is an uninvestable market here, whether it's geopolitical risk, the uncertainty of the accounting, all the stuff you can talk about is, I wish I honestly didn't have any China in my long-term portfolio. Emerging markets been great. Look at the EEM on the same chart, just to compare. And obviously EEM used to be FXI used to be a huge part of EEM, the China stocks. Mm-hmm. It's become a smaller and smaller part because other stocks are outperforming. Like it's a completely different story. So investing in EEM has been great here in the last few years. Not FXI. They hate China. I think, at this point in time, all the China stocks, they're guilty, always until proven innocent. They rally up. They're just selling opportunities. China, just flat out. I know they're doing a lot of cool things with AI. I keep saying, like, what I'm seeing over there looks really cool, the Unitree, all that stuff. But people just don't want to invest there.
I'm sure some people will be considering what's going to happen when the Chinese President Xi comes to visit in, I believe, next month. I want to say September or October. He's scheduled for a visit to the U.S.
Canceled. That'll be canceled.
It got canceled. Oh.
No.
They
to
want see the Qs too, Joel.
I mean, we look at it
long term.
They want to see the Qs too.
Against the FX. Like just have FX. Like just show the long term Qs on the same chart. And so we have the FXI. Blow up that chart. The big chart again. The 20-year chart was great. Bring that up on the Qs. No, we're talking the 20-year chart. Stay with us on the other chart,
I'm
Joel.
Get the monthly here.
Okay, you're going to do on this side. Okay.
And looking, when we looked at that monthly chart.
Go out as far as you can.
When we looked at that monthly chart or Alibaba or Baidu, it's like, okay, is the president, the Chinese president coming to the U.S. going to change all of that landscape? I don't know. I see that as unlikely. That seems unlikely.
I mean, China is the ultimate catch-up trade, or it's just going to be dead money like it was for the last 20 years. It's 20 years of dead money here. Is it going to continue? That's a quarter of a lifetime.
Wow.
A quarter of a lifetime you're investing in
China,
lifetime. And you're losing money. I mean, this is just, completely guilty until proven innocent. We saw it with Japan. Japan went that 30-year bear market. Yeah, this happens, folks. Believe me, it happens in other markets. It hasn't happened in the U.S. markets, but it has happened before. EWJ, bring that up. Again, you probably won't see it, but 1993 we hit those highs in the Nikkei, and it didn't hit new highs until a few years ago. So I mean, Japan, we can't go far enough back, but it was like 1995. So I mean, we do see some of these markets, obviously go into these long periods, and then they have great periods after that. Is China's time coming? I'd like to think so, but every time it seems like it's their time, there's another reason for the stocks to roll over. So it's, again, just so hard to invest in China, even though everything they're doing over there looks really cool.
The other earnings report that we had on our radar, if we're cool to go away from China here.
Yeah, sure.
Guys, and we don't have to cover this earnings report, but it was Deere, DE. Any interest, chat, or hosts in
What's
covering
trading
Deere?
up? So yeah, let's hear about it. It sounds okay. It's not a great day to be beating because they probably sell the rep, but
and like a decent report to earnings of 510 for Deere. Analysts were at 470, so they beat by 40 cents. That's a fine beat. Sales also beating pretty substantially, about 12.5 billion. Analysts were closer to 11 billion, so that's also a nice beat. I don't believe that they gave guidance for ticker DE stock here this morning. It's up 2%.
It's a nice pop. It's already kind of off the highs here. I mean, so I said they sell the rep, well, they already have. Where did this get? Over 600?
Yeah, there's
615?
Yeah.
6 Wow, I see a 608.94 print.
608.94, Dennis.
Okay. Anyways, it's over $600. It's just we're still in this fade trade market. As much as the markets are making new highs, and you think everybody's been raking it in. What has been working in this entire month, and really even last month, is the fade trade, where you're simply buying dips and shorting rips. That is what has worked. Blindly shorting rips has been working, on so many stocks. So we've seen so many stocks pop up and they give it back. Even on the great Micron, even on the great SanDisk. Yeah, it's been an incredible run here. But look, here it is, the inevitable selling of the rip starting to come in. We're going to get that SanDisk 1500. Sure looks like we might kiss it here today. So, I mean, this has been just a choppy last couple of months, even on your leaders. And then you go into some of the laggards and they just chop all over the place. So, they're up, they're down. This has been the way. The fade trade, the contrarian, the last 2 months have been a contrarian's dream. And if you're trading momentum, you keep getting chopped up, and it's because we're in a contrarian market.
Boy, going to the Deere, the street they wanted out ahead of the report, closed on the low of the move back at the July lows, and now you're getting a reprieve here. You're up $15. I don't know if you're going to get back in the 600 area, but let's hold yesterday's high. Yesterday's high was 596.06. You're trading there right now. If you're not a pre-market trader, you're not an after-hours trader, you're not anything. You're looking at your daily chart, and you're saying, well, 596 was yesterday's high. That's what we're trading now. If the bulls want this, then go bid. Now it just takes 93.50. Go bid at 596. Take it up to the next daily high at 610. I mean, it's the onus is on the bulls on this one here. Got to get it above yesterday's high first and foremost.
Continuing on here from yesterday's news, Moderna was just an incredible move. And I mean, if you were fading that early, you were in trouble. So the fade trade doesn't work across the board here. Although today it's working again. We were speculating they could do an offering, but then you were looking at the cash and saying, well, they still have a lot of cash, so maybe they're not going to do an offering. Doesn't matter. Stock's down 17 points now. This thing went crazy last night. They went up to 195 and now just dropped $40 from those highs. So fade trade working here too, but the timing of it's critical. I mean, this has been a big move here, Moderna. It's so much so fast, and it's a tough tape. Like, are you going to get that follow through, or is it going to be some profit taking? I think, again, some profit taking is in the cards here, and that's what just happened today.
Ooh, tough technicals on this one. But I saw him juicing this in the after hours. I'm like, holy macros, this thing gonna go to 200.
It tried.
It tried. It won at 94.88. I mean, if this is not like algorithm trading at its beastly mode, I mean, they came in, they saw the news. I don't know. The short interest wasn't, super high, kind of open near low of the session, and just buy. They just keep buying and buying and buying and buying until, their little algos say, there's some big fish out here. There's some big sellers. We'll sell too. Sell. I just be looking at that closing price from yesterday. I mean, overall, it's a great thing. When I think about these kind of things, I think about, okay, there's, stage 3 is great and everything. When is it gonna, get to market? But let's get some comments from someone who knows a lot more about this than I do, and that's Adam F.
Adam F from Stat News. He is the axe in these biotech names. I don't know if that's the best word to describe there, but he is the source. He was tweeting this morning a little bit of some broader perspective and then a little bit more focus on Moderna. Wednesday's quote here: Wednesday's success for Moderna validates the neoantigen vaccine theory. Genetic sequencing identifies and predicts the most vulnerable mutations in a tumor. Then mRNA is used to train the patient's immune system to identify those unique tumor targets. It's also true that to become a transformative cancer treatment more broadly, these neoantigen vaccines will need to benefit patients with other tumor types. Merck and Moderna are running 9 phase 2 and phase 3 studies right now across multiple tumor types and stages of disease, including non-small cell lung cancer, bladder cancer, and kidney cancer. And he commented here on the buy-side investors. He said, some of my biotech buy-side investor sources were slack-jawed Wednesday, watching Moderna stock price rise 180%. The XBI, the sector's most closely tracked index, closed up 6%. It was a painful day of losses for a lot of biotech specialist investment funds. Why? It's counterintuitive, but Moderna is under-owned by biotech specialist funds, so they missed out on the gigantic move. Their fund performance is also benchmarked against the XBI, so these investors took a double hit. What do you guys think of some of those thoughts? Any highlights to pull out of the commentary there from Adam F. and Stat News?
I mean, the XBI has been unbelievable. And we were arguing in the think tank yesterday. I mean, XBI probably makes sense to continue to move higher because we found out, after the fact, like after we were giving the news yesterday on Moderna, that AI helped a lot here in these trials. They're using AI.
Mm-hmm.
I mean, if the biotechs continue to use AI, how much more discovery, and how quick discovery is going to happen here. So I think we underestimate how important AI is to biotech. And we've been saying for a while that XBI is trading with the tech names, and it is. Like with some, even like the Microns and the SanDisks, it has been too. This is just, like I don't even know if it's sleepy anymore. This is just, a huge beneficiary of AI, and maybe that continues. So on dips, probably want to be long XBI. I'm long into my long-term account.
I mean, it was good for Merck. Merck is a much bigger company. It's holding up pretty well here today, only down $1.90. Just a historical move for Merck. I mean, for these kind of situations, if you're looking for follow through, I think you could 145 is not that far away. The closing price from yesterday is also something to keep an eye on. It's the best mark that you ever had in Merck, as well as the high of the day. Late 26. I mean, this stuff could be coming to market. So when's it gonna show up in the actual earnings, right? How are the insurance companies going to approach it? And I think the one thing that really excited people is that there's other implications for this. Like it worked for melanoma, right? This kind of treatment or research or whatever. What if it, the potential that expands into other types of cancer? I think that was the euphoria behind the stock yesterday.
I think so. I think you're right. I think Moderna could be a little bit of a poster child here for AI into biotech and drugs. And maybe that's what we saw this week.
Yeah, but how quickly can they manufacture a personalized vaccine is my question. Everyone's different. Everyone has different height, different weight, different, preconditions. I mean, there's a lot of things. It's a personalized vaccine. One for you, one for you, one for you. But price don't lie, and they loved it yesterday. So if you're looking for more follow through,
profit taking today, though.
Yeah, little profit taking today.
Another SpaceX lockup expiration today. Stock is trading down here ahead of the pre-market. Ahead of that, obviously the overall market weighing on this. We're getting another dip. We're back at the 135 IPO price, Joel. It's like a magnet. Can't seem to get away from it. Do we find support at the 135?
No, absolutely not. Stock is still way overvalued. This was just a textbook, run it into the lockup. People got caught. You came right back. I mean, come back 150. I mean, come on. The opening day low, and that is where that's where it stopped. So let's see it retrace. And I tell you right now, market is not helping it at all, right? And this is a tremendous move. I mean, and how could once again, I don't want to get too down on the algos out there and stuff, but come on, 150 to 225 down to 105, 106 back to 150. Did the value of this company really fluctuate that much in 2 months? I mean, I don't know where I mean, Dennis, if you go into your valuation rant, I mean, it's gonna be a long, long time before.
Yeah, well, we've done rants on SpaceX, and we know the stock at this point in time seems crazy. You're talking like 65 times sales. We're seeing people saying 130, but they're not including the Anthropic numbers. But I mean, this still, it's got a long ways to go to be a value stock. We'll say that. Is there a story to drive it? Yes. Am I long some SpaceX? Yes. Do I think, it can eventually grow into this valuation? Yes, but this is not a 2026, 2027. We're talking like, if we look out to 2030, you can start to squint your eyes and say, okay, I can see why, but you got to squint your eyes to do it. And there's some stocks right in front of you that you don't have to squint your eyes for, and that's why those stocks seem to obviously, continue to perform. So at this point, SpaceX is overvalued for sure today, but I could see it growing into it. I still, would like to buy more. I'd love to get it back down at 100.
Right now, just looking real short term, we're down nearly $4. I'm looking at the parallels at 130, 130.17, 130.50. That's $6 away. Maybe get a bounce there the first time, but then you get in. I just don't like these kind of bars, and I'm trying to emphasize this with the S&P chart. These kind of bars. Where are people going to step up in here in this area? And then you go to I'll go to the S&P, and what you're seeing and what you're experiencing right now is where are the buyers? I want to know, where are the big buyers in this here? Are they here? Are they here? Are they here? Now this makes a lot more. This area is really where we're getting kind of close to where we broke out from.
Yeah.
Maybe we'll get a test. Old resistance, new support. There's a look at the S&P. Somehow I brought the S&Ps in here again when talking about SpaceX. Sorry, folks.
Micron SanDisk continue to roll over here. We'll get our guest here in a second, but the rollover is real. Micron SanDisk were up all night. They have come down hard here now. So obviously these are your leaders in tech still right now. It's kind of an everything sell-off. We've been saying we don't get these everything sell-offs anymore. Today we are getting it. Now, again, we know what happens. Stocks open at 9:30 and rotation starts to take hold, and they start buying up other stocks, even the staples. Even the staples are starting to lift a little bit. Like you're seeing Coke, Pepsi start to come back up here, trying to like kiss around, like not down that much, considering Walmart's down 6.5% here. So it's pretty impressive, that some of these stocks actually holding on. Utilities are trying to go higher despite TLT selling off here. So there is a little bit of reluctant buying here in the pre-market, I would say. I mean, Berk.B, Apple, of course, green, because it moves opposite the market. I mean, it's crazy, but it does. Like, there's Apple. If they're going to sell off, we better buy Apple. Like, should we just, like the rotation is so crazy. Like, what breaks it? Like, what actually breaks it and says, look, Apple isn't really a defensive stock. Apple is still a tech company here. What breaks that mentality that when the markets are in trouble, we're going to go buy Apple? What breaks that? I'm asking the chat. Because that's what really needs to break to get the markets to have an everything sell-off. In order for the markets to have an everything sell-off, we've got to have people going to cash, not Apple. What changes that mindset? I'm asking you.
I mean, if we're applying it to Apple, and I'll let the chat I'll let the chat respond, but I mean, I think it's the consumer. If Apple is a consumer staple nowadays, every single person has a phone in their pocket. I mean, I think if the consumer starts showing like a weakness, then maybe. Did we see that with Walmart today? I don't know. What do you think about that, Joel?
Totally uncorrelated here, but Nvidia miss in lower guidance coming
What?
up.
No, you're saying what would happen? You're scaring. I was
You're
like, what are you
predicting?
talking about?
I'm not
What would
predicting. Dennis asked,
Sorry.
what,
I think they would still buy Apple. I think if Nvidia missed and
That's
lowered guidance, I think
rotation.
they would buy Apple that day.
Right?
I think they'd buy Apple heavy. That's how stupid this market is. Like, it's so rotating. It's all like it's allergic to cash. Cash is absolutely hate. Like, why does the bond market really suck? Because people don't want bonds or cash. They only want other stocks. Stocks have been just the only place to be, really. I think about like how much the bond investor has been punished over the course of the last 3 years. It's not even about bonds going down. It's about the stocks and the opportunity cost as well. I mean, when you look at the TLT, this is the biggest drawdown I'd imagine the TLT has ever had. We're talking
Gotta
about
be.
$171 to 83. We're at a 20-year low. A 20-year low on the TLT. 20 years gone. Now, again, you got a little bit of a dividend in there, sure. But I mean, this is just the proxy for the bond market right here. You look at government bonds, TLT, safe. And this is just, and then you think about the opportunity cost. And then you're like, holy crap, I cannot touch bonds. Even those portfolios that are like 60-40s, they're so much underperforming as well. Like, is it the end of the 60-40? I mean, that's what's probably been happening too. Money managers don't want a 60-40 anymore, or even a 70-30. They want a 100-0. They don't want any bonds in there. There's nobody at Twitter that wants to go and buy and have a 60-40 or a 50-50 portfolio. Like we used to say, should be half bonds, half stocks. Remember we learned that in school, Joel. Half bonds, half stocks. It's the safe way to be. And the bonds are just destroying your equity, like positions here. So I don't know. Like, you get the Treasury coming, you get the Fed coming in, try to defend it a bit, but it is a serious problem. Like, and it's been the stock market's gain.
It sure has. Not today, but they're giving, not today. As we continue, our guest will be joining us here in just another minute or so. That'll be Michael Piccolo. He's a special situation analyst over there at Wedbush Securities. So we were waiting for Michael to join us.
I just gave him a little email, see how he's doing. Okay, so we got SpaceX IPO lockup. We talked about Moderna. We talked about earnings. We did have a request to cover Webull earnings, but we haven't touched on anything crypto yet. You want to go there?
Yeah, I mean, crypto had a great day yesterday. I'm not a huge fan, but I tell you, it had a day. The Trumpster, you cannot fight the Trumpster. It's having a great morning here, too. Trump has reignited crypto here. And what did he say, Brentster? Because he was talking about all kinds of stuff with crypto.
He didn't say a ton, to be honest. I listened to most of the event. He basically just urged the other legislators to pass the Clarity Act. And then he welcomed execs from the crypto space to the podium, and they spoke. We had Vlad Tenev who spoke from Hood. We had the Intercontinental Exchange CEO who spoke. That's ticker ICE. We also had, I think, one other. Oh, we had the Coinbase CEO there. Interestingly, we had heard this report was going to, we heard this White House event was going to be for crypto and prediction markets. We learned later yesterday, after it was kind of happening, the prediction market execs were not invited to the event. It was just the crypto execs. Another highlight that I wanted to mention is at the end of this event yesterday in the Roosevelt Room, in the White House Roosevelt Room, Trump said, I will be speaking with, I'm going to be meeting with the, quote, AI people next week. He did not specify who or what the AI people were, but he seemed to imply that, okay, I'm having a crypto industry event this week. I'm going to have an AI industry event next week.
The comment that moved markets here, though, is he said the U.S. plans to buy a sizable amount of Bitcoin and other cryptocurrencies. And with that comment, everything went crazy. Because we know when they have come in an Intel stake, when they've come in, obviously on these other stocks, they've just propelled them to the stratosphere. That comment made crypto go absolutely crazy. I'm going to say it again. The US plans to buy a sizable amount of Bitcoin and other cryptocurrencies. Also says that they will be the undisputed leader that America will be the undisputed leader in Bitcoin and crypto. So, I mean, this is commentary that's going to move price. And it was a huge pop for Bitcoin, and it continues to go up here because this market is like, oh my gosh, the president's behind us and saying stuff about it. To the moon, Alice, and that's what's happened here.
Yeah, I mean, the Clarity Act takes crypto out of it's been in this regulatory limbo, right? And it gives a clear roadmap for crypto, for businesses, and just the whole structure around Bitcoin. The catch is, I mean, it's a catalyst, Dennis. You talk about catalyst trades.
Yeah, for sure.
This is the catalyst. The catch is it hasn't passed yet, and it's stalled in the Senate. There's some huge political disagreements over this. So it's fine and dandy, if it gets passed, right? And the street is anticipating that it's going to get passed. So I don't know exactly where the vote stands or where the Senate or what's going on in politics nowadays, but the only the risk that you have by chasing this move is it doesn't get passed, and then then you're right back down at that consolidation.
And we're in a contrarian market where rips have been sold on so many different stocks. Yeah. I mean, here you are on Bitcoin, Joel. You're coming back up to resistance area here. Is this the time where Bitcoin, shrugs it all off and goes back to 100,000 here? I'd say guilty until proven innocent. I mean, you're still under that big, ugly black line there. Yeah. I mean, and it's just been a broken story for a while here now. So can the Trumpster ignite it? He did yesterday. Does it continue is the question, or is this like a one day, where we continue a 24-hour rally here and then, fizzles out again? Because every rally in crypto in the last couple of years continues to fizzle out.
It's still up again today. Not much on the charts here. I'll just go with the Bitcoin futures, and I'll just give you my next level. This is basis the futures. Right, let's call it 75K. 72,590 is the current high. So you're getting nice follow through, and it's just funny on a day where you get this move by the Treasury, right, and then you get this move with Bitcoin. And then you get this move in gold. It's given, some of it back today. Silver didn't move as much. It's like a little bit of like, oh my gosh, inflation is going through the roof kind of thing. And what's the Treasury? The Treasury doesn't know what to do about it. So let's buy Bitcoin.
That's kind of a crazy thought, Joel. But you might be onto something there.
Right. Well, that's what the price. Go with the price, and the price is telling you that Bitcoin had a super long consolidation period, right? And it broke out of the consolidation period. That's the black line is the 200-day moving average. This is the 50-day, and you made a nice move away from it. So let's see if it can continue on its merry way. And just if you're trading this on the headlines, then I don't know when the actual vote is, so that will determine whether this move continues or not.
Let's go back to earnings here. Advanced Auto Parts, which has been worst of breed for a long time, broke here, AAP, and the stock is down 21%. So we're not going to get you anything good here either, but it's weak guidance. I mean, we know AutoZone, O'Reilly, even the leaders haven't been great here. This has been the laggard of all laggards, Advanced Auto Parts here. 44 bucks. It's getting hammered here again. Brentster, give us the results.
All right, the quarter was mixed. They beat on the bottom line, 103 versus around 80 cents, but the sales did miss. They were at about 2 billion. Analysts were over 2 billion, about 2.04 billion. Their guidance was raised, but as you mentioned, Dennis, it wasn't super favorable versus the analyst estimates. They're looking for 2026 earnings 260 to 330. Analysts are closer to $3, so kind of at the lower end of the range there. Shares down 22% this morning.
Hammered.
Yeah. Oh boy, tough chart
These are not the dips you're looking for.
Yeah, I mean, I'm sure this is way over the expected move. You're just sitting here near the low of the pre-market 40.50 or 43.50 is your pre-market low. I'll just go back to this. If you're looking, I know I'm giving some levels that are far away here, folks, but that's what the charts are dictating. And this was an important area back earlier in the year, and that was the 40 buck area, $4 away. So keep an eye on that if you're looking to try a potential long in this one or cover short. But that's what the weekly chart
We
is.
missed the Webull earnings. I forgot about
Woo!
that we wanted some. So go back to Webull, Bull, and this stock has come back. It's been on the comeback trail here for a while here now. And the earnings are pretty good.
Give me 1 sec to pull them up here. Webull reporting 71 cents, it looks like. Analysts were looking for about 72 cents. And shares here this morning are trading up about 13%.
Big move. And the street was ahead of it yesterday. Anticipatory buying ahead of the report. Big day yesterday. Nice volume yesterday. Is it time just to run with Webull? Well, we'll see what happens at
$10.
$10. Yeah.
When you get these things, the 10s, 5s, the 10s, those are your natural resistance points. So let's see what it does there. Hard to buy it under 10. Looks like a tough level to buy, especially on a day where everything's dipping. I know crypto's being helped here today, and you have stocks like, Robinhood, which are up because of crypto. But we'll keep an eye on that crypto rally here because guilty until proven innocent.
Pair of highs at 10 and a quarter here just after that report came out. So we'll see what happens at 10 and then 10 and a quarter. But just on days like this, and I can remember Jeremy Newsom, talking about, when you have the big move the day before. I mean, it's just like, yeah, I'm just gonna. This was a good trade. I bought it all in the 8 handle, and I'm getting to sell it near 10, and then boom, I'm done. I'm moving my algo over to something else.
Please let me correct myself. I was reading the wrong numbers there. The Webull Q2 earnings were 4 cents. They beat by a penny, 1 cent, and sales also beat 198 at versus a 180 estimate. Excuse me, there for the incorrect info a minute ago.
Okay.
The everything sell-off continues here. I'm trying to find some life. Berk.B obviously always shows life, so it's gone green here. But Apple has even gone red. So there you go. So you even lose an Apple here today. We'll see. But this is an ugly market. This is one of the uglier days because even on these big down days, they've been really led by like some of the AI leaders. And they've just been down, like Micron saying just down 7-8%. The S&Ps go down, 440 handles because of that. This is not that day. Like SanDisk and Micron are down, but they're not down that much. This is a day that everything is selling off here. Again,
not everything.
What do you got green? Oil's green.
Yeah. The one thing you don't want to see green. Up. You don't want up. You don't want up. ExxonMobil up 3, Chevron up 3, ConocoPhillips, FANG, EOG, PSX.
You don't want oil up.
All up, and then so what is and it's something we talk about. What is that going to hurt? Well, Delta down $1.25, UAL down $2. It's going to hurt your airlines. It's going to hurt your cruise lines. It's going to hit your travel and leisure. So, not the good. I mean, you want to see this reverse. You want to see this reverse quickly here. And in the regular sessions, you always go, wow, man, it's boost down 40. Yeah, buy the dip. It's going to work. We'll come back up to the bottom of yesterday's range, go green on the session, and move on our merry way. I mean, I know we had the big breakout day earlier in the month, but it's been some tight ranges, and then one big day, and then it will sit there for a couple days. And unfortunately, after this breakdown, we really didn't, it's not having the same kind of consolidation. Maybe we are. Maybe we're having this little consolidation phase here that we did earlier in the month, and the bulls are going to settle in here and find us some nice nice support, and just curve us right back up here. But we'll see. We now have a tradable low is 76.80 1/4. So we've distanced ourselves for it. I can't, if I told you I had a number there, I'd be lying to you. So when you distance yourself from the pre-market low like that, you're thinking, oh man, maybe it's a day where we've already seen the high of the day and the low of the day, and we'll just pop back up into the 7,700 handle and just chop around.
Well, if you want to take control of the show, drop a 20 there and we'll go straight to it. BWET. And I don't know a lot about this ETF, but all I can tell you is on the chart is this thing continues to go higher. Break wave tanker shipping just goes up every single day, it looks like here. So great like ETF to look at here. I mean, we were $150 in July and we're talking about almost $450. That's a 200% move. And this thing doesn't seem to go down on up days or down days. It just keeps going higher. I don't know what the hell's in this thing, but it's pretty impressive.
Looking right now, it is an Amplify ETF. I am going to their website and I'm looking at the holdings right now. I will report back in just a sec.
You know what the number one holding is? It looks like it's Moderna. It looks like it's Moderna.
Shut up. Why? Wait, no, this is a shipper.
I don't think so. I don't think it is. Is it? The Yahoo Finance. It's got to be. Oil shipping contracts. Wait, no, this is not right. No. I don't know why it said that. That's wrong.
Let's see.
Amplify. Sorry, strike that from the record.
Why, Michael Crockett? Thank you for the amazing.
That was Yahoo Finance that gave me that, by the way. Yahoo
Finance. Good enough. Thanks. Michael Crockett, what is a bit of your thesis on this one?
His thesis is oil and shippers. I mean, it's got to be.
They hold like shipping contracts and stuff. This is weird. This is an interesting ETF.
Don't look now, Dennis, but look what's on the rise. Nordic American tanker shipping.
The shippers are hot.
Uh-huh.
Well, I guess that Strait closed, I guess, so they got to find other ways to ship around. So maybe this is benefiting. I don't know. This is a weird. I've never heard of this ETF. I've never looked at it before, so I'm like trying to figure out what this is.
I have the holdings here. It took me that long to find the holdings
because we're gonna try to figure this out live here.
Okay, give me 1 sec here. I'll read while I get it going on the screen.
Great contract.
So it says, what are these contracts? It says TD3C FFA 270 KT. Oh, that's a tanker. Middle East Gulf to China, June 26th. That is 50% of the fund. Middle East Gulf to China, August 26th is 35% of the fund. West Africa to continent, July 26th is 4% of the fund. I will show these on.
Very unique ETF.
Give me 1 second.
It sounds like shippers going everywhere except the United States to me. Right? Did you just say China?
Yeah, it's from the Middle East to China, and it's from West Africa to the rest of Africa. Those are the contracts that this is tracking for these two classes of ship tanker.
This is all shipping contracts.
Interesting.
This is interesting. I don't know anything about shipping contracts here, so it's kind of out of my wheelhouse from a fundamental basis here. Joel throws NAT on there. Obviously, North American tanking shipping. So we've seen these shipping stocks trying to do good. Scorpio is another one there. Like there's a few of them out there. And they've all done pretty well too, but nothing like this. So I guess the investment was shipping contracts. There's something new here. Alternative investing 101.
These are the actual contracts on screen right now. You can see them. They're like literal contracts, like options contracts here for each of these shipping routes. What were you gonna say, Joel?
No, Gayfade was all over this. We look at it in our chat. He said it's just all shipping contracts. So when there's, I mean, this is like kind of simple Simon, right? When there's when there's problems in the shipping, I guess owning those shipping contracts is pretty lucrative. From a technical perspective, I don't even know what to tell you on this one. Trading up another $10. I don't know if you own it. I don't know if you have price target. It looks kind of thin to me here, so it only traded 372,000 yesterday, so kind of keep just keep an eye on that all-time closing high price, and if you had some targets,
I guess this is benefiting from the Middle East turmoil. Like, I mean,
yeah.
this is what this is. This is benefiting from the Middle East turmoil here. So I guess it's like, look at where this was. Like, look even farther out, Joel. Go back to like this. It's in October of last year. A year ago, this was $13. So this must just be directly benefiting from Middle East turmoil. So I have no idea, but it looks like, if the war ends, get the hell out of this thing, it looks like. But holy man, this has been an incredible investment for some people. I've never even seen this before, BWET. So this is great. Thank you for bringing this to our attention.
And thanks for the awesome tip too, Gabe, and to Michael Crockett.
Yeah, great job. Thanks, guys.
Wow. Do you guys want to do...
If you want any more tickers, do some ticker time here for 3 minutes here. If you got a ticker, let us know here. Obviously, the guest, can't be here today, unfortunately. Here, technical problems. He's emailed us back here, so sorry about that. But if you have a specific stock you want to talk about, let us know here. We will take a look here for the next 5 minutes and do a little bit of ticker time. BDRY is another one of those shipper ETFs, so I guess they don't all work because this BDRY has been a disaster. Well, no, actually, no, it hasn't. Sorry. It's been pretty good, too. Disaster compared to BWET.
This is another
this one's
one
been working up, too. This dry bulk shipping stuff is working in this war.
And this is the same Amplify ETF segment, the Breakwave thing. This is the dry bulk shipper.
Shout out to Amplify on these exotic ETFs.
At
least they went outside the box. There's so many of these ETFs that are just like, oh, we'll do double long. Oh, we'll do double short. They're outside the box on this one. I like it. Give me something cool and new. So I'll give them some props. Let's get those Amplify people. Let's reach out to those guys.
I like that.
Tell them to come on the show and talk more about what they got cooking here, because this one really cooked. Frontline's another one, FRO.
A couple tickers here from the chat. I'll let you guys pick. Yeah, we got a lot. We got. I'll name a few, and you guys pick one that you want to stop at. Malta Goya says serve. Jared says cake. Ramashin says Broadcom.
I mean, we could do serve. It's a disaster. I mean, robotics just hasn't been the year of robotics. And a lot of these companies have no hope for profits here and any time soon. It's been the year where it's kind of show me the money. Obviously, the companies have been spending money, like we've been talking about with the large CapEx have been underperforming. And then you've got the companies that have been receiving money, been doing well. Serve, unfortunately, is not receiving any money here at all.
Yeah.
And they have some cool concepts, but that's all it is at this point, is really just concepts. Serve robotics is a tough one, man.
At the low, you guys, if you buy here, the most you can lose is $4.75. I mean, and needs to get back above $5. That was it. Let's do a fun one like NBIS.
Okay.
Well, Nebius is interesting because that has come down substantially. Did the offering there yesterday or 2 days ago, has come off those highs. Always seems to have underneath demand here, 200 to 220. You just wonder when, the bubble bursts here, though, because, again, this is another company that probably isn't going to be profitable for a lot of years. So it's hard to just come in here and say, yeah, it's cheap at this price. Well, you can't say any of these things are cheap. You're just going on prospects of future dollars, potentially, obviously, continued investment from some of those major companies that they've gotten contracts from, like Microsoft. So, I mean, very dependent on very few companies for these contracts as well. No real hopes of profits in the immediate, so fundamentally it's tough. I've liked the company because I think they're involved and they're connected. I think it's still tradable. Anywhere in the low 200s might be a buy here again, but it's a trade, not an investment.
Man, just 280 to 220 in just a couple days. I mean, man, tough chart here. I mean, maybe wait for a gap fill under 200 here. You had a pair of highs at 196. I know that's $24, $25 away, but I'm just not seeing anything. And if you want stability and you want to say, okay, we're going to regain this move, then your 50 days right here at 224, but got hit with that offering yesterday.
Let's go with, let's do Microsoft for Tony.
Microsoft for Tony. Better hold that low from Tuesday. All else, where do you go after that? I don't know. I don't see any support in here, Dennis. It was a gift. The gift over 500. The gift that
We've
keeps
run a
on.
long ways, like coming in here and buying it now. It could continue. It's holding up well. But I mean, you start talking about a stock that was $380 10 sessions ago. Now it's $480. I don't know. Like if you're buying it now, I feel like you're doing it backwards. So it's hard to chase some stuff here. So I like that it's like holding up well. I think if you're doing it as a buy, we can set it up. 477 is your stop. So you cannot have the thing breach 477. Through 477, you start thinking about 450. So I would say if you want to go long, you can, but you got to stop out below 477. And don't be like, this is what everybody does. Well, I'm gonna stop out at 477. I think it was 470. It opens up at 470 on it. I was like, well, my stop was 477. I can't sell at 470. So it'll come back up. And then it goes down to 460, 450, and now you're stuck. So don't let a trade ever become an investment. So we're setting it up for you right now. You buy Microsoft at 480, 350 right now, which is the ask. Sell it if it goes below 477. That's your stop. I'll set that.
And I'll set up the other scenario. If you choked on this thing like I did when I went from 460 to 350 and back up over 500, and you don't like the position, what an unbelievable selling opportunity it is between 480 and 500.
One more. Go one more? Or is there news dump? 9 a.m. news dump?
I'm doing the 9 a.m. news dump. We could do Zscaler for Robert B. and the STN Think Tank. Thank you, Robert B.
Zscaler. Wow, ooh. Another one that's just come a long ways back, and we've run too far now. And yeah, we're not at where we were in 2025 when it's $336, but we're a long ways up from the 120 we were in June. So, at this point, again, same setup here. You don't want to start breaching 180. You start getting through 180, and then you start thinking, oh, bears are taking back control. So as long as it holds above 180, you got a shot here. I kind of like the Microsoft setup a little bit better, but I'll give you the same thing. 180, I'd sell it if it was below that. So if you're buying at 182 and a half, you don't want it below 180.
Dennis is great. I love it because Dennis comes on. He gives these scenarios. He gives the bullish setup. He
trying to be bullish.
And I'm looking at this and I'm like,
it's like sell, Mortimer.
I'm like, if this thing doesn't get over 191 on the jiffy, then you're in for a world of hurt here. You got major resistance. Look how patient they were at 190, 191. 3 days in a row, they were selling in, just a little size here, just 100 shares, 100 shares, 100 shares, and they sold a lot of stock. Now, where are they going to come down to? Right now you're $10 away from that. So I'd be, the longer this takes to get back over 191, the more concerned I would be about giving back a lot. Some of this move, not all of this move, but easiest chart. Thank you. Was it Robert in the STN room?
Yep, it was.
Thank you for giving me a chart that is at least has some kind of highs or lows in the same area. Okay, Brent, anything anything at 9 o'clock here?
Not really. No. Corning GLW won a contract from a company called Zayo, but there's no terms disclosed. Not a news item that would move the stock, but Thomson Reuters with a press release highlighting they are launching their quote next gen of co-counsel legal, the AI ecosystem built for legal professionals. Why I would highlight this one? We just have been looking for like data sources, like information providers, definitely legal, definitely consultant. We've been looking for these companies to be showing us their hand at what they've been doing with AI. Thomson Reuters here may be showing just a little bit of that with a press release highlighting new AI legal stuff here this morning.
S&Ps have rallied back here.
Yep.
I think it's going to be a chippy day. What's that mean? I think the chips, which have just sold off here, if we're going to turn it around, they're going to be your leaders out of here because we have oil up and we have a regular, with Walmart down and at the lows, we have a real economy sell-off here today in stocks. And we know what that means. Sometimes they'll move into the AI stuff. So don't be surprised if the market starts to climb out of this, it's going to be tech stocks that bring us out of this today. So actually on this dip, I'm looking at the microns and the SanDisks today.
Okay. I think, and I said a little bit earlier when we bounced off that low, it just could be one of those days where, you made the high and the low in the after hours in the pre-market, and then you just go up and down, and chop all around all day. So let's see. I mean, a big win for the Bulls here would be, getting it back to green on the session at 77.30. I just will note, we'll see where the S&P cash opens. Was talking about this with CC on options unchanged yesterday, and he loves to look at the open. Oh, we got some breaking news on
Super
SMCI.
Micro announces completion of its independent investigation and continued enhancement of its export compliance program. SMCI shares initially popping 50 cents on this press release, which just hit right now. It says, as previously disclosed, the company completed the it says, as previously disclosed, Super Micro was informed on March 19, 2026 that 2 employees alleged conspiracy. We know this part. The company today saying they completed the internal investigation led by the company's independent board members and board of directors. And what do they say? They say that the investigation was led and was conducted. Where are the results? The investigation team reviewed the customer transactions that were subject. They did not find any evidence that any current member of senior management had knowledge of the alleged diversion scheme or any actual diversion of restricted products by the company. Nor did the investigation find the company directly sold export-controlled products to known restricted parties or locations. So how much did this move the stock lower? Back when
the stuff before was back.
Wait, yeah, this is like the second investing. This is like not
they got rid of they hired BDO. Wasn't it BDO or KPMG? One of them. Yeah, BDO, and we never heard from those because they didn't probably like what they had to say. So they went and got their own investigators here to get a better thing of what they have to say. So it's fine. They clear whatever the hell those guys were doing. I mean, the stock from a technical base, somebody wanted the SMCI technical, bring it up here. From a technical base, it looks pretty good right now, actually. We just dipped. You get this, independent directors, independent investigation here, clear. I mean, this is like green light go probably here. So I actually like the stock from a trading perspective here. I would stop myself out on the recent low of 35.72 if I was going long. But again, I'm not investing in SMCI because who knows what they're going to do next. From a trading perspective, though, I wouldn't be surprised if they, get the dip gets bought.
And I would not be surprised if they sell the rip, what they already did, because you got your head over heels.
Got over 38?
Yeah, it did. Yeah.
What?
I see 37.93.
Yeah.
Crazy.
I'd keep an eye on 38.16. That's your 2-day high. Because I think, I mean, if you didn't take profits into strength on these couple days off the earnings report, here's perhaps a little opportunity to sell on the strength, and you don't want it to go red on the session. All right, folks, we are going super overtime today. We'll be back with you tomorrow. Miss Schneider will be joining us here. Thanks. Fun session here. That 9 o'clock news kind of gets us going. All right. Thanks, folks. We'll see you tomorrow.
Thanks, everyone.